let's talk about NTPC. It's a name that's basically synonymous with power in India, right? A government-backed giant that's kept the lights on for decades. But today, it's a company standing at a huge crossroads, kind of caught between its past, which was built on coal, and a future that's demanding clean energy. It's a massive story of transformation, risk, and some serious ambition, and it all kicks off with a huge new deal.
So just the other day, NTPC made a big splash, awarding this massive contract. We're talking over 6,100 crore rupees to another public sector titan, BHEL. And this wasn't for just any old power plant. It was for what they call a supercritical thermal project. All that really means is it uses some pretty advanced tech to burn coal more efficiently with fewer emissions. It's a huge signal that even as NTPC is looking to the future, it's still doubling down on its bread and butter. But see, that's what brings us to the central question we're really digging into today. On one hand, they're still investing in traditional power, but on the other, there's this whole other, much greener story unfolding. So what is really powering NTPC's future? Is it the coal that built its empire, or is it a massive pivot towards a whole new energy world? To really get what's at stake here, you first have to wrap your head around the sheer scale of this company. I mean, NTPC isn't just a power producer. It's practically a cornerstone of the entire Indian economy. Okay, let's start with this number. Over 82,000 megawatts. Now, what does that actually mean? Well, to put it into perspective, the NTPC group all by itself accounts for about 17% of India's total installed power capacity. Think about that. That's almost a fifth of all the electricity potential in the entire country, all under one roof. And here's where it gets really interesting, because the source of that power reveals the heart of NTPC's big dilemma. Despite all the talk about new energy, a colossal 77% of its mix is still coal. This deep, deep reliance on fossil fuels is both its greatest strength historically and, you guessed it, its biggest challenge today. And you gotta remember, this isn't just any old company. NTPC has what's called Maharatna status, which literally means great jewel. It's a title the Indian government only gives to its most strategic, most important public companies. It gives them a ton of freedom to invest and operate. So because of that status, pretty much every move NTPC makes has huge ripple effects for the entire nation's energy security and, of course, its climate goals. But, you know, being this big and having these massive ambitions, well, it comes at a price. And to fund everything, both the old and the new, NTPC has taken on a pretty significant amount of debt. And that creates a very risky financial balancing act. The whole challenge is kind of summed up in this one figure, a net debt of 2.36 trillion rupees. That's not just a big number. Financial analysts have called it a mountain of leverage. A debt load like that puts the company in a really tight spot, where it needs to make strong, consistent profits just to keep up with the interest payments. And hey, this risk hasn't exactly gone unnoticed. A recent analysis from Simply Wall Street put it pretty bluntly. They said this level of debt is making the company's stock a bit risky. So that financial reality is just hanging over every single strategic decision that NTPC makes. Okay, so you're a coal giant with a mountain of debt. How do you navigate the future? Well, you do it by making one of the boldest, most ambitious green pivots in the corporate world. NTPC isn't just dipping a toe in renewables, it's planning a full-on transformation. Their whole roadmap is called the Brighter Plan 2032, and the goals are just massive. The plan is to grow to 130 gigawatts of total capacity, with a staggering 60 gigawatts of that coming from renewables. That would completely flip their energy mix, taking renewables from just 10% today to over 45%. That's a radical shift. And they're getting a major helping hand here. The Indian government recently slashed the goods and services tax, the GST, on key renewable energy parts, like for solar and wind. They dropped it from 12% all the way down to 5%. And the effect of that is simple, but really powerful. It just makes building green energy projects a lot cheaper. This policy is a huge boost for NTPC's bottom line as it's trying to make this expensive green transition. It lowers the cost of every single solar panel and wind turbine they put up. And this pivot goes way beyond just your standard solar and wind farms. NTPC is investing heavily in the next generation of energy tech. We're talking green hydrogen hubs, massive battery storage systems. They're even retrofitting old coal plants to burn biomass to cut emissions. This isn't just a strategy change. It's a full-blown technological reinvention.
So let's recap. We've got a legacy coal giant saddled with debt making this massive, high-stakes bet on a green future, and it's got government support. So how is this giant gamble actually playing out? Well, the market and the numbers are giving us our first clues. If you look at their latest financial results, you see a pretty complex picture. In the first quarter, NTPC's revenue actually dipped by about 3% compared to last year. But, and this is the crucial part, its net profit jumped by 11%. That contrast suggests they're getting more efficient and more profitable, even as their whole business model is shifting. It's a classic sign of a company in deep transition. And it looks like the market experts are buying into this story. Financial analysts who cover NTPC see a lot of potential upside. Their consensus target price is around 417 rupees, which is well above where it is now. That tells you that despite all the risks, the experts believe the company's green strategy is the right move to unlock major value down the road.
So we're left with this one big question. NTPC is attempting one of the largest green transformations on the planet. I mean, if they pull it off, they can not only secure their own future, but become a blueprint for legacy energy companies all over the world. But if they fail, that mountain of debt could become impossible to climb. The final answer is going to shape not just the fate of this one company, but a huge piece of India's energy future, too.